Welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because it seems as though Bitcoin has finally started its relief rally. And now the base case is still that we have entered a bear market, but a relief rally is great for a couple of reasons. For one, it gives you an opportunity to de-risk if you have too much exposure and don't think you'll be able to survive a bear market. But even more importantly, it gives us a chance to assess Bitcoin's strength and see whether or not it's able to reclaim major levels and increase the likelihood of this all being one big bear trap, or if it just rolls over at the first sign of resistance, further confirming our bear market base case. Relief rallies also do a great job at resetting market sentiment, and we can see that very clearly here with the fear and greed index finally exiting extreme fear after being there for almost 2 weeks in a row. And it's crazy just how much optimism there is right now compared to Monday when I published this free weekly report called Extreme Fear. The Bitcoin death cross bounce seems to be playing out as well, just like it has every single time this cycle, but in a bull market we would expect that bounce to head to new highs, while in a bear market we would expect it to get rejected and roll over after making a lower high. So we'll see what Bitcoin does once it retests that 200-day moving average. USDT exchange inflows are also pointing to a relief rally for Bitcoin, and if we take a look at this chart here, we can see a very clear inverse correlation between Tether exchange inflows and Bitcoin's price. At Bitcoin local tops, we see major Tether outflows from exchanges as investors sell the Bitcoin for Tether and then pull those profits off of the exchange. And at major local bottoms, we see big Tether inflows to exchanges as investors send over that Tether to exchanges to buy up Bitcoin. And in the past 2 weeks, we've seen the largest Tether inflows over the past 3 years to exchanges to presumably buy up this dip. And although I expect it to diverge eventually, it's still crazy how similar this price action looks to 2021 and 2022. You have false breakout, range breakdown, break below the 50-week moving average, and then bottom in your previous trading range. And then if we compare that to today, we see almost the exact same thing: false breakout, range breakdown, break below the 50-week MA, and then bottom in the previous trading range. And that's when the relief rally started in the previous cycle, so I don't see why this time would be any different as of right now. Spot Bitcoin ETFs also finally broke their 4-week streak of consecutive outflows, with this week having net inflows, which is usually what we tend to see at local bottoms when that sell pressure finally subsides. And it's great to see that buyers stepped in as soon as Bitcoin dipped into our cheap region and got to within 50% of its 200-week moving average, further solidifying just how important this metric is for Bitcoin. So what am I doing with my portfolio? As I mentioned in Monday's free weekly report, I bought the dip on Bitcoin, Solana, and Ethereum because I couldn't help but buy when I saw that much fear and uncertainty among market participants. And whatever changes I end up making this upcoming Monday, I'll definitely try to go into more detail in that free weekly report. And as always, if you'd like to learn more about my portfolio system or mental models I use to navigate this market, or common mistakes I see so many investors making, you can check out the Crypto Enjoyers program and community in the video description. We have finally almost made it through this very rough month of November, down 17.4% as of right now, but the monthly candle does have this nice big wick to the downside, even further increasing the likelihood that we continue this relief rally bounce into December. It's nice to see Bitcoin holding that 100-week moving average as support alongside that previous consolidation range. As for MicroStrategy, it's still looking for a bounce in this previous consolidation range where it spent most of 2024. As for the GLI, it continues to chop sideways here, but is showing very early signs of a new uptrend forming, with the market now pricing in an 86% chance of a rate cut in December. That change in rate cut expectations is putting downward pressure on the US dollar index, so hopefully it rolls over here and puts some upward pressure on the GLI and risk assets instead of continuing this mean reversion rally higher before rolling over. We would much rather see it roll over right now, and perhaps that can be catalyzed with an announcement of who the next Fed chair is going to be before the end of the year. We have a lot lining up in December with the end of quantitative tightening, the announcement of a new Fed chair, and a Fed rate cut, which should all help Bitcoin's relief rally. I believe the main driver for risk assets as a whole, but especially Bitcoin, is fiat inflation and currency debasement, and that trend seems to be continuing in the long term. And I believe this global liquidity index macro breakout will continue in the long term. We just have to risk manage corrections and bear markets along the way. It's good to see that the S&P 500 still looks strong and had a strong weekly close. The S&P 500 re-entering price discovery will be a great tailwind for Bitcoin's relief rally, and we'll just monitor this relief rally one resistance level at a time. Right now, Bitcoin is battling to reclaim the range low, then it's going to be the range mid, and then our best case scenario, if this is in fact a relief rally, is making it back to the range high before rolling over. As for gold, it continues to look strong here with another strong weekly close because gold investors know the Fed is trapped and has no choice but to ease because the labor market continues to weaken. We have the unemployment rate rising. No huge spike in layoffs just yet, but continuing jobless claims keeps heading higher, making it clear that people are struggling to find a new job once they lose their current one. We're still waiting on an update to PCE and core PCE, which should have a huge impact on rate cut expectations and liquidity as a result. And the Atlanta Fed real GDP forecast is still hovering above 4% for Q3, so it doesn't seem like we're entering a recession in the short term based on the current GDP data. As for Ethereum, it's doing a good job holding on to its range lows. Its spot ETF saw a pause in outflows and some small inflows coming in this week, similar to Bitcoin, and the Ethereum Bitcoin pair continues to look strong and maintain support here. As for the rest of the altcoin market, still holding on okay with an altcoin season index of 35, but interestingly enough, the Russell 2000 was able to close above 2,500 and above its 2021 all-time high. It's still consolidating at that previous all-time high, but it's getting very close to a price discovery breakout, which historically has been a great sign for the altcoin market. Similar to Ethereum, Solana is doing a pretty good job of holding on to its range low as well, and it did break its inflow streak into its ETFs, but the outflow day was tiny compared to the inflows that came before it, so I'm still liking what I'm seeing there. And Solana Bitcoin is still holding on to its range lows also that it has held going all the way back to December of 2023, so as long as we're holding that area, I expect Solana to continue doing well against Bitcoin. The performance of Bitcoin, Ethereum, and Solana against our NASDAQ and S&P 500 benchmark still doesn't look great, but I expect this to turn around in the long term because in the long term, the federal government is still running huge deficits. That trend seems to be worsening year after year. Exponential debt growth results in exponential money supply growth as the currency gets debased, and that's a bullish tailwind for risk assets we price in the debasing fiat currency like the S&P 500 and fixed supply assets like Bitcoin. But as always, let me know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.